Hi everyone. Hope you all are doing good. So today the main objective behind this webinar is to have a clear understanding about candlestick patterns. So you all might have gone through this one. You might be wondering why it is red in color or green in color, or what is the psychology behind it. So our main motive behind this is just to have a clear understanding about the psychology behind this candlestick and how we can understand the sentiment of market by just realizing the candles. Okay, so that is what we'll be looking forward to. So before just starting the webinar, I think I would like to share this is Nil Nair from Tradeplus. Before starting off this session, let's look a small brief about Tradeplus. I think Tradeplus is a brand of Navia products, Navia Markets, and Tradeplus provides free demat come trading account with 0% AMC. For more details as well as account opening, you can contact us on 0444 9427 500. And the link also will be just given in the description. So you can just use the link for opening the demat account. It is very simple. So let's start it. So this is it, candlestick patterns. So as I mentioned before, every candle will be having different story. So it's all depends upon the market sentiment. If suppose it is a green in color, it has a different meaning. Or if it is a red in color, it has a different meaning. And not just the candlestick, it has a body as well as a wick. So we will be learning all such things in this complete webinar. So first of all, before starting off with what is candlestick pattern, let's discuss about what is chart. So chart is just a sheet of information in the form of a table, graph, or diagram. So if you want to have a clear understanding about what is happening, and if you want to understand, I think a diagrammatical process of what is happening over the years or the range bound, by all such things, I think instead of looking into some other stats, we can clearly represent that in an easier way with the use of chart. So it can be of any form. It can be of table, or it can be of graph or diagram, whatever way. So that is the main motive of chart. So that is the reason this has the name of candlestick chart. So that is chart. Chart is just only a visual representation of the range bound. And the next one is candle. As I mentioned before, every candle will be having different sort of stories. So first of all, we will start off by just looking on the proper definition of a candle. A candle represents price activity in a stock in a particular time frame. As you can clearly see that, I think on the bottom, you can see on the x-axis, you can see it's May 16th, it's what written. And you can see a red candle there. So that is supposed to be the activities that happened. The activities in stock market means the involvement of buyers and sellers. So with that activities, what has happened in the market on that particular date, that is what we can see on that particular candle. That is what we mentioned here by saying time frame. So the time frame, the activities of buyers and sellers, and what is the final product there. So that is what you call it as candle, and it represents open price, high, low, and close price in a specific time frame. So we'll completely detail, we'll be studying about all such things about what is this open price, high, low, close, everything. So the main motive is that I think the point at which the candle opens, that is what it has been mentioned as open price. And to the high it has gone, it will be mentioned as high, and to the lower part, that will be low. So we will be completely detailing studying about these such things in the coming ones. So longer the length, stronger the price action. You can clearly see that I think some candles will be having a long body here, which can see, I think it's a bullish one. It's a green color in color. So that shows that I think the buyers are more involved in this. So if you look at here, I think there is not much body. You can see a small body and a big wick. So it means that there is not much strength. So that is what I mentioned it. If the candle is long enough, that shows that the buyers or the sellers are involving in a better way. So the price action can also be a bit better. And the next one is, it can be of any color based on the price movement, bullish or bearish, common green and red. So which means that I think, as I mentioned before, if the involvement of buyers are more, then obviously the color of the candle will be green in color. And if suppose the involvement of sellers are more, the color of the candle will be red in color. So this is it, the main topic. What is candlestick chart? A representation of stock price movement chart that comprises of small units called candles. So candlestick chart, we have just completely learned this in term wise, because first we have learned what is a chart. Chart is obviously, as I mentioned before, it's a range bound where you will be able to understand a particular data in a just completely convenient way. And the candlestick is just the representation of what happened on a time frame. So if you look at here, you can see that on the x-axis, you can see March, April. And if you look at it on the y-axis, then you can see $10, $20, $30. So that is the range bound you can see here. So on particular date, you just mentioned as March and April. So on a particular date, what all things happen, that you can understand by just looking on a chart. If you look at that, the pointed one, it's a red candle. So that shows that I think the sellers were more on that particular date. And from then on, I think it has moved up. So which means that from then on, from that range bound, the buyers have started involving more in it, and that helped the market to move up. So candle gives you more detailed information on price movement happening. Exactly. That's just the point that we mentioned before. That tells you what the market is going to happen and the involvement of all the buyers and sellers in the markets. That is it. So you will be just having a bit of doubt about what is this candle, how does it form, why it is in green in color or why it is red in color. And at the same time, I have mentioned that I think wick, something like that, and body part. So you will be wondering, I think, what are all these terms? So first of all, before getting into analyzing the chart, we will be learning about what or how you can just specifically understand what is a candle. So on that, you can see that it's a real body that we have mentioned here, which means open to close. So the range bound between open to close is mentioned as the real body. So this is a complete candle. Okay, I think it will be having upper shadow, it will be having real body, it will be having lower shadow. Involvement of all such things is what we call as a real candle. So the central real body, yes, real body, rectangular in shape, connects the opening and closing price. So from where it starts and where it closes, that is what we call it as a body. The open price to the close price range, that is what we call as body. And sometimes you can see that even if the candle opens from here, it might have gone up and sometimes it might have come down. So the range to which it has gone to the real high, that will be marked as the high of that particular candle, and to what extent it has gone down, it will be mentioned as low of that body. So that is it. From open to close, it is called as a body, and the distance from open to high, it is called as upper shadow, and the distance from close to low is mentioned as lower shadow. So this is what it all connects here. And the next one is bullish and bearish candle. So on the previous one, we saw about, I think, what the body parts of candle, the wick, the body, everything here. So here we'll be telling you, or here we'll be teaching about how to understand whether it is a bullish or a bearish candle. So first of all, we look on the bullish candle. It represents buying activity in the stock in a particular time frame. The close will be higher than the open. It shows more activity from buyers. So which means that if the open, and if suppose, if they imagine that the candle opens at a 400 range, we'll go with examples. So if suppose if the candle opens at 400 range, and if it moves up and if it closes at 410, which means that the close is higher than the open. Imagine it starts off at 400 and it moves up to 405 or 410, whatever. So which means that it opened at 400 and it closed at 410. So the close price is much better or higher in number than the open price. So that you will have a bullish one. So that shows that the activities of more buyers. If there are more buyers in a particular stock on a particular time period, then that candle will be having green in color. So this bullish one indicates more buyers. And the next one is bearish. It represents selling activity in a stock in a particular time frame. The close will be lower than the open. It shows more activities from sellers. Exactly the vice versa of what we learned in bullish candle. In the case of bearish candle, we'll go with the example once again. So if imagine I have bought a price and it was bought at 400 rupees and it closed at, and it came down and it closed at 390. Okay, from 400 it came down to 390, which means that I think there were more sellers, and that is the reason it came down. So it opened at 400 and it came down to 390. So it opened at 400 price and it closed at 390. So which means that the open is higher than the close. So in that cases, you will see a red candle. If I bought a price, if I bought a stock, and suppose if that script has gone up, if suppose I think if it has gone to 400 from 410 or 420, whatever. So if the close price is better than the open price, you will have a green candle. And if suppose if I bought at 400 rupees and it has gone down, which means that the sellers are more. In that cases, you will see a bearish candle. So that's how you just differentiate bullish and bearish. In simple terms, if you're having more buyers, then you will have a bullish candle. And if you're having more sellers on a particular time frame, then you will have a bearish candle. So that is all about. So now we have learned about, I think, what is a candle, the body parts behind it, and the obviously the bullish candle, the bearish candle. Now we have a particular set of names for particular set of candles where they do really have some good meaning. So first of all, we'll learn about the types of candles that we are having. The type of candles, first of all, this is only the part 1 on this webinar. We will be having a part 2 too. So the part 1 is single candlestick patterns. The second one, obviously the part 2 will be multiple candlestick patterns. So in the category of single candlestick patterns, we will have 4 differentiation: Doji, hammer candle and shooting star, spinning top, and Marubozu. So these are the 4 things that comes under single candlestick pattern. So we will learn from it just one after the another. With examples, we will be learning this. So it will be much easier for you guys to understand. So first one, we will discuss about Doji. Okay, a Doji candlestick forms when a security is open and close are virtually equal for the given time period and generally signals a reverse pattern. Obviously, I think it might be a bit confusing for you guys. So I'll make it in simple terms. So imagine the stock opens at 400. So it moves to a lot of range, and if it closes at 401, if it opens on 400 and it just moves up and down and it's closed at 401 means the difference between the open and close candle is just 1 rupee, which means 400 to 401. It might have gone to a lot of range, but here what we mention is that open and close price. So the body of the part, I hope you remember the body and wick. Okay, so the body part will be much smaller than the wick, which means it opens there and it closes almost almost a near range. So if that happens, the body will be much smaller and you will have a higher wick on that. So that candles is what we called as wicks. That's what we call as Doji, and it has a particular name, that is long leg Doji. Long leg Doji means the body will be a bit small and you can see a lot of wick there. Look, the height it created or the low it created is much higher. So the body will be low as well as will be a bit higher. So that is why it's called as long leg Doji. And then the next one is gravestone Doji. Okay, if you see here, it is almost same in Doji. In all these cases of Doji, the body part will be much lower and the wick will be much higher. So in this case of gravestone Doji, you can see that it opened on a lower case, on a candle there. It opened almost at that small range, on the below range. It moved up all the way, then it came down and it closed almost on the near range of where it opened. So which means that more sellers are involved in this. It opened here, then it moved up, but it couldn't sustain because of the heavy sellers. So the involvement of the sellers brought the candle down and it closed near range. So which means that the involvement of sellers are more. So this candle indicates that more selling will be happening and the market will be having a bearish sentiment from there onwards. And the exactly opposite that of gravestone Johnny is dragonfly Doji. You can see that here, it opened here, it moved down all the way, but it couldn't sustain. But the buyers pushed on a particular time frame, the buyers pushed that candle and it almost closed on an opening range. So this one is also just like Doji, and that is the reason is it came down and the buyers made the stick to go up. So which indicates that more buyers are coming. So this candle indicates that the buying pressure is there in that candle. So in the coming candles, you might see that buying pressure. So this is about Doji. Actually, the particular meaning of Doji is that indecision in the market. If the market is green in color, then you can say that it is going to be a bullish one. Or if the market is going to be red in color, then you can say that it is bearish, so it might go down. So this one, the body part is very thin and the wick will be much higher. So you can't really make a decision out of it. So Doji candle is almost considered as an indecision candle. And after the second one will be hammer candle and shooting star. You can see that I think the formation of this candle, it is almost in a hammer shape. And that is why it is called as hammer candlestick. So hammer candlestick and shooting star. I think you'll be just learning detail on the next page here. Here we go. The handle candlestick, the hammer candlestick. So fine. The hammer candlestick is a bullish trading pattern that may indicate that stocks has reached its bottom and it is positioned for trend reversal. Okay. So we have mentioned before, imagine this is a downtrend. The script is coming down, the stock is just coming down and it almost reaches the bottom. After reaching the bottom, the script has gone down and it has gone. That is why we are able to see a wick here. It came down and then the buyers just pressurized the market. So after the involvement of the buyers, the script moved up and it finished almost to a range of opening price. You can see that in the distance between the open as well as close is almost close enough and it is having a long wick. But still, the reason why it is having a long wick is because the involvement of the buyers here. It moved down and then the buyers helped the market to move up. So it almost ended on a hammer shape. So this hammer, if the hammer is formed almost on the end of a downtrend, it indicates that there is a pressure from the buyers. So the market might even go up. And then you can clearly see that after the formation of a hammer candle, the market started moving up from here. That is it. The second one, specifically, it indicates that sellers entered the market, pushing the price down. Just the point that we said. It entered the market, they pushed the market down to this zone, and then, but were later outnumbered by buyers who drove the asset price up. So the sellers moved the market down, but they couldn't sustain. So the buyers came in and they drove that particular price range to a good position. So after coming down from here because of the sellers, the buyers got involved and it helped the candle to finish near to the open range. So that is an indication that it might even go up. So it is so that is the point behind this hammer candlestick. And the next one is the shooting star candlestick. It is absolutely the opposite of what we learned in hammer candle. There is a point here. The shooting candlestick is a bearish trading pattern that may indicate that stocks has its top and is positioned for trend reversal. Just the opposite that we have just learned in that hammer candle. Imagine this is an uptrend. So the stock is moving on an uptrend. It reached the top. After reaching the top, you can see that the candle moved up there. So, okay, so almost exactly the uptrend. The candle was almost getting itself ready to move up. So after going there, it couldn't sustain. The sellers came in with high numbers. So it just brought the candle down and it ended almost on a range of where it opened. Okay, so it moved up, then the sellers pulled it down, which means that there is a high selling pressure happening there, and that is the reason why it moved up and it came down on a particular time frame itself. So if that cases, if you can see the involvement of more sellers on that particular stock on a particular time frame, then it is indication that there is a pressure by the sellers, so that there is more chances that the market could go down. And you can see that if going uptrend, it formed that shooting star on the top of that pattern and it came down suddenly. So you can expect this. So the main motive behind using this shooting star as well as the hammer candle is it is almost used as a trend reversal objective. So if it is having a downtrend, after a downtrend, if a hammer candle is formed, it is an indication that trend reversal might happen. So after coming a downtrend, if a hammer candle is formed, the indication is that it might even go up, and exactly the opposite with the shooting star. If it's having an upper trend and if a shooting star is formed, then it indicates that it might come down. So it is used as a trend reversal in the case of technical analysis. And the next one is a spinning top. Spinning top is almost similar to that of what we learned in Doji. You can clearly see that. Look, the green one, it opened in that range, it moved up, then it just came down and it closed almost on a near bound. Look, the open price is here and it closes here. The body part is very thin, but you can see a big wick there on both the sides, on the high side as well as on the upper shadow, as well as on the lower shadow. You can see the wick big, but the body part is very small. So if it's green in color, then it is called bullish spinning top. And in the case of red color, then it is called bearish spinning top. So we will be just learning that on the next page with example. So this is it, the spinning top. As I mentioned before, in these sort of cases, there is instability in the market. There you can't really say, I think, what is going to happen. There is not such stability in any mean. It has moved up, it came down, and it almost closed there. So there is no such stability to realize where the market will go. So you call this as an unstable one. So at the same time, indecision in the market, that is the right term to just make it. So there will be an indecision. In these cases of indecision, it is difficult for a technical analyst to understand what the market is happening. Just like the color of the candle doesn't matter here. Spinning top indicates indecision and consolidation, and it is an indicator for trend reversal as well as. So trend reversal, what do you mean by trend reversal? Just like what we learned in the previous one, just like hammer stick or spinning top. If it is having an uptrend, if it forms a candle by indicating that it might go in a different way, and if it just comes down from there, that is trend reversal. After having an uptrend, if a candle is formed by indicating that there is a pressure from the sellers, and if that from then on, if it comes down, then that is called as trend reversal. So there is spinning top and spinning bottom. We learned first in spinning top. First point is spinning top indicates indecision and consolidation in the market, as we already explained that. Spinning top in downtrend. Book profit if you are in short position, or you could enter into a new long position. So the point being here is that imagine the market is moving up. The market is moving up. It reached to a certain level, and then a spinning top is formed. Spinning top means indecision in the market. Okay. So if there is no such stability and if there is an indecision in the market, then you need to just worry about whether you should go on, because the market was going in an uptrend and it formed a spinning top. So which shows that there is an indecision in the market. So if there is an indecision in the market in an uptrend, then the chances for the market to come down is much higher. So if you are holding a position, imagine you have gone for a buying option and you are just in a profit. If somehow on an uptrend, if you see a spinning top, it's better to book your profit and come out. At the same time, if you're planning to enter into a trade, after forming a spinning top on an uptrend, then you can go with short position. Short position means you can go for a selling position on a day trade or whatever like that. And just lay opposite for spinning bottom. You can see 3-4 red candles coming there. After the formation of 3-4 red candles, you can see a spinning bottom here. So what do you mean by spinning bottom is that still indecision in the market. So after coming down, it formed an indecision, which means that the chances are high for that indecision to make it in a different track, which means after coming the downtrend, it formed a spinning here. The spinning bottom is formed here. So then the indecision will help the market to move in a different direction. So from downtrend, it moved to uptrend. So that is what you mean by spinning top and spinning bottom. And the last one that we are going to learn here is Marubozu candle. It is supposed to be the most important one in candlestick pattern because no other candle gives you much confirmation, much higher confirmation than this Marubozu candle. So we learned here, Marubozu is a Japanese word for dominance, which means that if you know that I think the body will be having an upper shadow or it will be having a lower shadow, what we call as wick. Okay, if the candle opens and if it just completely goes up without having any sort of wick or without having any sort of upper body or lower body, that indicates that the buyers are more involved. The buyers or just the sellers are more involved, where the body will be having only body. The candle will be having only body. It won't be having any sort of wick. So in that cases, you call it as Marubozu candle. They are extremely powerful candles, just we mentioned before, because they don't have wick. They will be only having body. So they are really the most powerful candles in the technical analysis. They have a long body with small or no shadow. Just to the point that we mentioned before itself. It will be having a body, but it might be having small wick, something like that, or it will be having no shadow. There won't be any such wick, but there will be only having a strong body that indicates the involvement of buyers or either sellers. When a green Marubozu candle is formed, it means that the stock opened at a certain level and kept rising without falling down. Imagine if we will take the example as the green one. Okay, we are talking about green Marubozu. It opened at this particular level. It didn't come down and it just moved completely up and it ended on a good range. So from here, without coming down, it just gone through completely and it ended up on a good range, which means that it indicates the involvement of buyers, which means that the involvement of buyers is what we mean it as completely on a bullish track. So the more bullish, you will see more Marubozu candle. And exactly the opposite is with red Marubozu. If it opens here and then it comes down without having any sort of upper body or wick or whatever, if it comes down and if it closes here, closes in wherever, I think if it's having a good long body, then it is called as a red Marubozu. Is formed when the price opens at a certain point and kept falling, just like here. It opened here without having any sort of wick, it completely came down to the bottom. So that is it about the red Marubozu as well as green Marubozu. It can be even used as a trend reversal for trend continuation candle or whatever. Imagine, I think we are having a downtrend. Okay, downtrend, you know that on a downtrend, red candles will be formed. So after the formation of red candles, if suddenly a green Marubozu candle is formed, means it shows that the buyers are getting into it. Okay, on a downtrend, the script is coming down, and suddenly if a green Marubozu candle is formed, that shows that the involvement of buyers are more. So the chances from there for the market to go up is high. So if you see a green Marubozu candle on a downtrend, then you can go for a long entry. And it's exactly the opposite with the red Marubozu also. If the stock is moving up on an uptrend and suddenly if it forms a red Marubozu candle, then it indicates that the sellers are more involved in that particular chart. So it might come down. So even though if you want, you can go with that selling option also. A Marubozu with higher volume is more powerful. So if the candle opens here and if it is having a very higher body, okay, instead if it starts from 400 and if it is going to 410 or 450, if it is moving 3 to 4% at a go, then it indicates that it is having more power, more volume, more involvement of buyers. So when you are having such more volume as well as more involvement of buyers, then it is most powerful because we will be able to understand the sentiment of the market. So the more power, the more volume it is having, then it is easy to say that Marubozu candle can be a really good candle in making your decisions. And now the Marubozu candle just we mentioned, I think we'll be doing it with examples, bullish Marubozu as well as bearish Marubozu. Here you can see it's a downtrend. From here it came down. So it came down to this level. So it was a bit of consolidating, bit of an indecision in the market. Then suddenly we saw a bullish Marubozu candle here. So what we learned in bullish Marubozu helps you to understand the trend. So from that downtrend, it formed a bullish Marubozu, which means that the chances for the market to go from there is too high because the involvement of buyers are more. So after the formation of bullish Marubozu, after the formation of more buyers, it just kept moving up and it ended at a good level. So you can use this as for entering into a trade by looking about the bullish Marubozu. And if you look at the bearish Marubozu, exactly the opposite. It was consolidating. It just came from an uptrend and it consolidated within a range. And after that, it formed a bearish Marubozu, a big one, a big red candle with more sellers. So then we can understand that the involvement of sellers are more. With such cases, with more involvement of sellers, then the chances for the market to come down is much higher and it just came down straight away from there. So in case of bullish Marubozu, the open will be low. The price from where it opens, it will be marked as a low, and to the high that it makes will be considered as close in bullish Marubozu. And in case of bearish Marubozu, where it opened will be marked as high, and where it closes will be taken as low. So yeah, thank you guys. So that is almost the end of the section that we have. So I think we have learned about we'll summarize what we have learned here. So we learned about candlestick patterns, the formation of chart, how a candle is formed, what is candlestick chart. I think that is it. And the how you can describe the body, how you can describe the body of a candle. The candle will be having a real body here, the upper shadow, the lower shadow, everything will be there. And then the bullish and bearish, how you can just differentiate between the bullish and bearish candle. That is also we have learned here. If the involvement of buyers are more, then obviously it will be bullish. If the involvement of sellers are more, then it will be bearish. Then the type of candlestick patterns that we do have: Doji, hammer candle, spinning top, Marubozu. And what is Doji? Doji means indecision in the market. Then the hammer candle as well as the shooting star. If it is coming to, if you are seeing a hammer candlestick on a downtrend, which indicates the chances for the market to go up is high. And if you're seeing on an uptrend, if you're able to see a shooting star candlestick, which means that the chances for the market to come down are more. Because for hammer stick candle, the pressure from the buyers will be high. And in the case of shooting star candlestick, the pressure of the sellers will be much higher. And then the spinning top, it also indicates the indecision in the market. So in this part, I think you will be having a small body and the wick will be a bit higher. Marubozu candle, which means the dominance, the involvement of buyers. If the involvement of buyers is much higher, then it will be bullish. And if the sellers are coming in good volume, then obviously it will be red in color and it will be bearish. So the examples to how to identify the bullish Marubozu as well as bearish Marubozu. So first of all, thank you everyone for joining here. I think we'll tell about it. I think we will be just sharing the link here. So you can, even though if you haven't opened a Demat account with Tradeplus, you can open from here itself. Tradeplus is providing you free Demat come trading account with 0% AMC. So all in one account from Tradeplus, you can start investing here, even though if you want to invest in mutual funds, IPOs or bonds, whatever. I think this is supposed to be the user-friendly app for you, where you can join it. And we are having the latest version of RocketPlus, where I think you can use a lot of things. You can view the chart just like what we have seen here. You will be able to make it in a convenient way. It is a user-friendly one. So the link will be shared. So if you haven't opened a Demat account, try to just open a Demat account using us. So first of all, again, thank you guys. Thank you for your involvement. Hope to see you in the next webinar.